What's up, YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks, and this is another segment of our top 3 option plays this week, where we're just going to go over a few different trades, stock fundamentals, and different strategies that you can do to make it through. Okay, but first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. Okay, so the first stock that we're gonna look at is GE. This is General Electric, and right now it's trading at 104.41. The first thing that I wanna say is that GE actually has an earnings report scheduled on the 26th. So that's not gonna be this week, but it's actually next Tuesday. So the company isn't projected to report any significant changes for their third quarter earnings because of supply chain issues. And even with their last earnings beat, so you'll see they were supposed to get 3 cents for their earnings per share estimate, but they actually got 5. So even with that last earnings beat, the price still stayed within its trading range that it started back in July. It's had some resistance at 107 to 109 and a lot of support around $96. So you'll kind of see it's been trading in between that range. Yeah, you'll see overall this stock isn't in any strong trend. So it doesn't have a strong trend, and it's definitely side trading. But one thing that's interesting about it is it's kind of trading very closely to its resistance up here around 107, and it's been up there for a while. The RSI, it's not too overbought. It's at 57, so that's not too bad. And then you'll also see, you know, we do have more dominant positive movement with this stock looking at the ADX indicator, but you know, we do not have a definite trend. So it's definitely side trading. Now, one thing I think is interesting about this going into next week is we recently just had a crossover with our MACD. I do like to see that crossover and kind of see how that develops further. We do have some resistance at 107 right now. We're at 104. Now, it's been in this resistance zone for a while. I said since back in July. That's, you know, it's a few months. For this stock, I'm actually going to be fairly neutral to bearish. And the reason why is because it is so close to this resistance zone. You'll see that at the beginning of last week, you know, it did have a lot of downward momentum. It was trading below the 50-day moving average, but going further into the week, we actually rose above that. We just surpassed the 50 moving average on Friday. We hit that high of 105, and then it kind of started to taper back down towards the end of the day. So going into next week, I'm really going to be bullish to neutral on this, and I would have an entry price. Right now it's at 104.49. I would have an entry price at maybe about 105 to see if it continues on that upward movement, and then up to reaching that previous resistance at 107, and see if it breaks out of that. If we have a pretty high volume, it's a possibility that we could break above that. Now, looking at the options, it does have a fairly low implied volatility of to 20 to 40. That's not that bad for implied volatility, and what I do like is it does have some pretty nice prices with the options here. So even if you wanted to pick something a little bit further out into November, you know, you're not looking at huge prices, maybe, you know, about 200 to 300. So that's not terrible to open a position for this. I'm going to pick an expiration that's, you know, a little bit not too far out. I'm going to go ahead with the October 29th, and I will probably get into the 105 call. Okay. And if you didn't want to do that, if that's a little bit high, you can definitely do a debit spread also. But I like it. You know, the implied volatility is pretty low. Volume and open interest are okay. And the next stock is FCX, Freeport McMoRan Trading. Right now it's trading at 38.64. It actually jumped up to 38.99 during after hours on Friday. So we are definitely in earnings season right now, because FCX also, they have an earnings update coming up for the 21st of this month. So now if you kind of look at this, the stock right now, it looks like it just broke above the 50-day moving average. It's had some really strong price movement since the beginning of this month. It's really been moving since the beginning of this month, and you'll see it just kind of broke above this resistance zone that we had at $36. So it jumped up to 38. You know, we want to go with the trend. Looking down here, look at the MACD indicator. Crazy MACD movements, very much so above the center line. It's really moving very well. Now, just getting into some of the news on copper. Copper prices were up this past week by 14.3%. So we have a short supply, higher demand, the price is going to go up. Okay. There's definitely a supply deficit right now. Any company that's mining copper right now could definitely see some high returns. FCX is expected to post quarterly earnings of 83 cents per share this week, which would actually represent a 186% increase since this time last year. And there's also been analyst revisions increasing by 0.87% in the past month. So the past 30 days, analysts have actually increased their predictions for their earning per share announcement. And we've talked about this before, but kind of looking at analyst changes, well, good or bad, anytime analysts change their views on a stock, so if they change from a buy to a hold or a hold to a sell, then that could be a good outlook of where the price is headed, because analysts, they really have their hands in the pot with this and just doing deep research on these companies. So when they change their views of it very close to earnings, and that's a pretty good indication of what could possibly go on with this. We were just saying earlier, the bulls are definitely in control in regards to what trend that we're in right now, where we're moving. Going into next week, I would have an entry signal of $39. So you see it hit that high of 39 on Friday and it kind of dipped down a little bit. It's still continuing upwards, but I would really want to see an entry price of 39, because that would indicate to me that it is continuing in that strong uptrend that we have going on right now. Even on the 5-minute chart, the trend isn't as strong because the ADX value is about 20. So I mean, it's okay, but you definitely see more control by the bulls in this situation. So that's going to be pretty good. Okay, going into the options, I mean, the implied volatility, it's a little bit up there. It's about 50 to 60. So that's okay. And then the option prices are, you know, they're pretty cute. So we have about $30, 40. And for me, I'm definitely going to be bullish on this, just kind of going with the overall market. All right. November will be all right. It's just a little bit more, but you can go ahead and get a 39 call for about 161. And the bid and the ask is only 10 cents apart. So that's pretty good. It has a pretty small bid and ask for this price. The most that you can lose with this is going to be that 161, the premium that you pay for this long call. And you know, that's just kind of something that you can do with that. Okay, and the last one is going to be SNAP, and right now it's trading at 77.34. Now this earnings play actually came from Tiblio, so if you haven't checked out Tiblio yet, definitely get into it. So during the second quarter, Snap was expected to have an EPS loss of 0.02 per share, but it actually had an earnings win of 0.10. Now it also had earnings beats for the last 4 quarters in a row. Beast. Yeah, so if you go to the options, you're gonna see that this has a very high implied volatility and it also has very high option prices. So you already know how that goes when we're going into our earnings plays. For the most part, I'm always gonna do a credit receiving play because of the high implied volatility. Usually when you have a higher implied volatility, you're gonna have higher premium costs. So when you do iron condors or credit spreads, that's gonna give you an opportunity to actually receive that premium instead of paying that out. All right, so let's get into Snap. So for the earnings play, I'm going to pick an expiration as soon as I can. As far as the put credit spread, like I said, I would do a put credit spread because, you know, it's just giving so much upward movement, upward strength. So I would do a put credit spread, and just to be safe, I would have my short put a little bit below this support. So we have support at 69. I'll probably have it maybe 69.50 or 68. So that's where I would put mine. Even though it is trading very, very close to the previous resistance, I mean, it's up there. So we'll just kind of see what happens with that. For my put credit spread, so I'm going to come down here and I'm actually going to sell the 69 put and I'm going to buy the 68. All right, so you'll see here for this one, the most that you'll get is 28. The money that you really get is how much you're able to get your limit price. So this one kind of has a pretty big bid between the bid and the ask. If you're going to do something like 30, you would get $30 back from that. And as long as that stock hasn't surpassed or gone above one of your short positions, then you'll be okay. You'll still be profitable with this play. So let's go up here to the calls. All right, so for the call, I'm going to come up here to 84. And so you'll see here we actually get a total credit of 53. All right, but make sure you guys check out this video I just posted about how to use the ADX indicator. That's one of the indicators we were talking about in this video. Really great for finding trends and finding positive and negative direction movement. So it's definitely going to help you in your trade. So make sure you check that video out, okay?